So, have you ever heard about SME? No? Okay, let me explain. So, the development of small and medium-sized enterprise (SMEs) holds profound significance in fostering economic growth and prosperity. In recent years, the intersection of SME with Islamic-based transaction has emerged as a compelling avenue for sustainable and ethical business practices. As the global economy continues to seek financial system aligned with ethical principles, Islamic finance stands out as a robust framework rooted in Sharia law, emphasizing fairness, transparency, and societal well-being. Islamic finance principles, including the riba and gharar, create a distinctive financial ecosystem that prioritizes ethical consideration. In this context, SME find themselves at the forefront of a paradigm shift, exploring financial avenues that not only support their growth but also align with the values embedded in Islamic teachings.
This documentary aims to delve into the nuanced landscape of SME development within the realm of Islamic-based transactions. We will explore how Islamic finance principles shape the financial ecosystem for SMEs, providing them with unique opportunities and challenges. From profit and loss sharing models like mudarabah and musyarakah to trade-based financing structures such as murabaha, Islamic finance offers a diverse array of instruments that cater to the specific needs of SMEs. As we traverse the regulatory environment surrounding SMEs in Islamic finance, we will assess the role of policymakers in fostering an environment conducive to the growth of this enterprise. This documentary will conclude by contemplating the future outlook of SMEs in Islamic-based transaction, considering emerging trends, technological investment, and the evolving regulatory landscape that will shape the trajectory of SME development in the years to come.
So, the development of SME through Islamic finance holds immense potential for achieving SDGs in various ways. First SDG is poverty reduction. 8 SDGs, decent work and economic growth. And 5 SDGs, gender equality.
And the 4th SDG is SDG number 9, which is industry, innovation and infrastructure. And the last but not least is SDG number 16, which is peace, justice and strong institutions.
This is SME. Let's find out. Let's go.
Small and medium-sized businesses, or SMEs, form the backbone of a nation's economic growth. Government policies, incentives, and financial assistance create a supportive environment for SMEs, fostering growth. Innovation is key to SME success, helping them stand out in the market, improve efficiency, and attract investment. Yet, SMEs still face challenges like limited resources, difficulty in finding skilled workers, and navigating complex regulations. To overcome hurdles, SMEs focus on sustainable growth techniques, optimizing sales, prioritizing customer relationships, and forming strategic alliances. The synergy of government support, innovation, and sustainable growth plans forms the foundation for SMEs, driving economic vibrancy, competitiveness, and job creation.
Alright, next we will look at the Islamic finance for SME. The needs for SME finance has grown because of the expansions of SMEs worldwide. SME Islamic financing, which meets the funding requirements of SMEs at every stage of the company life cycle, from startup enterprises to huge corporations, is one of the most well-liked Islamic products in Malaysia. The demand for funding, particularly Islamic SME financing from Muslim entrepreneurs, is a result of the SME's global increasing trend. As a result, over time, there has been a rise in demands for funding access. The organizations that are giving the SMEs the money are Islamic banks, Teka Nasionals, and Amanah Ikhtiar. One of the programs that the government has been introducing since 2012 is Islamic SME financing, which Malaysia has been pushing by giving participants incentives. According to the data, between 2014 and 2015, the overall funding for business financing climbed from 43.8% to 46.6%. The needs for the finance that complies with Sharia law is rising in tandem with the expansions of small and medium-sized businesses, which highlight the sector's significance for economic expansions. Islamic banking is a system in which all operations and activities within the sector must abide by Sharia law, commonly known as Islamic law. All operations and activities related to Islamic banking must adhere closely to Sharia law and forbid riba or interest. The Al-Quran prescription against riba is crucial for Islamic banking since it guarantees that riba transactions should not occur throughout systematic operation. But in accordance with Sharia, Islamic banking practices forbid other things as well, like maisir and gharar. In conclusion, all SMEs that require funding to expand their operations should grasp the opportunity as it has the potential to boost national income and benefit a multitude of other parties. To succeed in the loan application, this framework is merely a precaution. It is not a given that SMEs could receive a loan. Therefore, instead of giving up on a bad outcome, they should work even harder to acquire something valuable for their company in order to improve for the next step when they reapply for the loan in an effective manner. Field applicant needs to be more proactive in identifying the gaps in the applications.
Now, I will explain the opportunity of SME financing and how it works. Small and medium-sized enterprise SMEs play a major role in most economies, especially in rapidly developing countries. Malaysia is also not lagging in carrying out the business activities of SMEs to be used as the backbone and revenue contributor to the national economy. The government, financial institution, and other stakeholders need to work together to create an environment that allows these SMEs to continue moving forward without any obstacles. There are several potential opportunities for SMEs, and I will explain them one by one. First, financial institution. Financial institutions such as bank may be open to offering several types of service, as well as long-term loans secured by significant assets such as real estate and building. Depending on their creditworthiness, collateral, and business performance, SMEs can approach banks for financing. Second, government loan program. The government trying to provide SMEs with a special loan program. To facilitate SMEs access to financing, the government has partnered with financial institutions to organize this program, and it also might offer direct loan, credit guarantees, loan guarantees, and subsidy interest rate, venture capital, private equity. Some SMEs may look for opportunities to raise funds through venture capital firms or private equity firms that functions as a service offering financing to SMEs, which the potential to realize high economic growth. Venture capital firms typically invest in early-stage startup SMEs, while private equity firms focus established SMEs. Next, angel investor. The person is known as an angel investor whose function is to provide large funds to be invested in SMEs to start a business. Usually, angel investors exchange their money for convertible debt or equity, grants, and subsidy. These funding opportunities are usually aimed to supporting specific sector, promoting innovation, or fostering regional development. Grants and subsidies received by SMEs do not need to be repaid to the government. Local Economic Development Program. Local Economic Development Program are designed to help small business like SMEs. Grants, low-interest loan, and other financial aid may be provided by this program. The last one is collaboration and partnership. A strategic partnership which largest companies with strong financial capital and many or other established SMEs can provide positive support.
Small and medium-sized businesses (SME) seeking innovative financing strategies aligned with Islamic values can promote just and moral financial practices through Islamic financing choices. Islamic finance emphasizes risk sharing, asset backing, and moral behavior. Sharia-compliant instruments like musyarakah, mudarabah, murabaha, ijara, among others, offer SMEs funding, fostering a cooperative and moral financial environment. Now, let's dive into two key Islamic financial instruments, musyarakah and mudarabah. Musyarakah, a profit and loss sharing venture, involves SME contributing knowledge and managerial skills while financiers provide funds. This collaboration encourages responsible decision making, share risk and teamwork, promoting SME expansion and long-term success. Imagine a scenario where an SME, with its entrepreneurial spirit, joins hands with an Islamic financial institution or investor. This collaboration forms a unit venture, Musyarakah, a way both parties contribute capital and, more importantly, share in the risk and rewards of the business. Unlike conventional financing with fixed interest rates, Musyarakah operates on the principle of profit and loss sharing. The fruits of success and the challenges of setbacks are distributed based on a pre-agreed ratio, fostering a shared responsibility. With Musyarakah, access to capital becomes a reality without the burden of collateral requirements. Another powerful financial instrument for SMEs is Mudarabah. This contract involves one party providing funds and another offering labor, with profit shared based on an agreed upon ratio. Mudarabah stands out as a catalyst for innovation and entrepreneurship. Mudarabah links earnings directly to the success of the business. This profit-sharing mechanism motivates business owners to explore new opportunities, take calculated risks, and strive for success without the concerns of conventional interest payments.
What is the key principle of Islamic-based transaction? It is the prohibition of riba, profit and loss sharing, and prohibition of ghara. Prohibition of riba. Riba means to increase, to grow, to exceed, and many more. In this case, it is the increase of payment on top of initial borrowing amount. In today's world, we are surrounded by riba offered by the conventional bank, such as interest on car loan, interest on house loan, interest in the usage of credit card, and many more. Next is profit and loss sharing. This is type of partnership that involves two parties that share the profit and bear losses together based on the capital share and effort. Lastly is the prohibition of ghara. What is ghara? Ghara means uncertainty, deceit, fraud, speculation, and many more. Uncertainty in transaction could happen when price is not determined beforehand or subject matter is not fixed ahead of time when making the transaction. Lack of information could lead to ghara too, when there is few details regarding the subject matter or goods. Some of the examples are uncertain of the quality of the subject matter, not letting the buyer know regarding the damages of the goods sold, and many more.
For some, business is just about numbers on a page, but for others, it's about building something bigger, something guided by ethics and responsibility. That's where Islamic finance comes in, which it is about growing your business hand in hand with values with Sharia as your compass. Both Islamic and conventional financing offer valuable tools for SMEs. Islamic transaction prioritize Sharia compliance, sharing risks and rewards through partnerships, while conventional loans provide faster access to capital through interest-based debts. However, each approach has its own challenges, with Islamic finance facing resources limitation and regulatory hurdles, and conventional loans exposing businesses to the ups and downs of interest rate and financial leverage. Furthermore, Islamic financing offers flexible financing options like profit-sharing models, musyarakah, or trust-based investment, mudarabah, that can be tailored to your specific needs. This can lead to greater financial stability, reducing reliance on traditional loans and their associated interest burden. For conventional transactions, particularly loans, offer SMEs a quicker and more accessible way to secure funding compared to Islamic finance mechanism, which can be more complex and involve stricter criteria. This allows SME to take advantage of immediate opportunities, invest in growth initiatives, and also improve operational flexibility by managing cash flow fluctuation. In conclusion, for those who seeking speed and quick bursts of fuel, conventional loans hold the allure of fast tracks and immediate access. But remember, speed without direction can lead you astray. Interest, the engine insatiable thirst, can leave you feeling drained and burdened. Islamic finance, on the other hand, invites you to work hand in hand with your financier, sharing risks and reward like partners on a shared expedition. It might be slow climber, but with each step, you build a foundation of ethical values and mutual trust.
In conclusion, we have discussed the development of SMEs in Islamic-based transaction, with some questions to get deeper into the subject, which is backed by some journal articles and website. Firstly, a few factors are contributing to the development of SMEs. For example, assistance from the government via policies help in the development of SMEs in terms of financial assistance, incentive, tax advantage, and many more.
Growth, competition, sustainable growth plan, access to local and foreign markets, and excellent operations also are a few factors contributing to the successful development of SMEs. However, we found out that a few problems prevent the development of SMEs, such as due to lack of financing, insufficiency of qualified workers, and difficulty in establishing efficient distribution channels.
We also discussed Islamic finance for SMEs and the opportunity for SME financing. In terms of Islamic financing for SMEs, the government established a program in 2012 to help participants by giving them incentive. There is also the existence of Islamic banking to facilitate service to the public while abiding by Sharia law, which is referred to the sources from Al-Quran and Al-Hadith.
On the other hand, there are also opportunities for SME financing from several sources and initiatives, such as from the financial institutions that offer some services for SMEs who need financial assistance. There are also opportunities from the government, such as government loan programs and government grants and subsidies to support SMEs. There are also a few other initiatives like venture capital and private equity, local economic development programs, collaborations and partnerships, and financial support from angel investors to help SME secure financing.
We also discussed the Islamic financing option available for SME via Islamic financing instruments such as Musyarakah and Mudharabah. In addition, we have discussed a few key principles of Islamic-based transaction, which are the prohibition of riba, profit, and loss sharing. All transactions in Islamic economy shall to these few principles to prevent haram and certain transactions.
Lastly, we analyze differences between SMEs' involvement in Islamic transactions and conventional transactions to see the comparison between these two transactions.
Overall, we have well discussed the development of SMEs in Islamic-based transaction in this paper. Thank you so much for watching our video, and don't forget to like and share, and remember, don't leave any comment. We will see you next time. Bye bye. Sup.